Good morning. It's another new week. It is Monday, January 13th, and volatility is on the rise. That is the focus of today. All this week, well, not all this week, but definitely in the middle part of this week, we're going to see heightened volatility. We already see it right now in the morning session. In fact, if we look at the VIX right here, oh, by the way, this is the 0DTE morning market analysis. And I'm Coach Ernie, and I'm here to take you through our situational analysis where we look at volatility, price direction, and our market opportunities for 0DTE trades. And this morning, let's start off with that. We'll start off with the analysis, then we'll get to the volatility report, and I'm going to share with you some resources that you can download that will help you get a handle on how to judge the potential energies that are coming into the market every morning. But anyways, we're going to be looking at volatility. We're going to look at price direction. We're going to be looking at the IV for this morning and see whether or not there are going to be opportunities for certain of our edge case trades. And then also looking at the market structure and where our entry setups are going to be. So we can see right now on the VIX that this morning volatility is definitely heightened from where it was on Friday, where we left off. We're sitting right now at 21.27, and that is squarely inside of what we call the Goldilocks Zone. It's called the Goldilocks Zone because it's just right for us doing 0DTE trades. That means that we're going to have excellent pricing on our options. They're going to be cheap, believe it or not, in high volatility, which seems counterintuitive, but when we're talking about butterflies, that means we can get into wider flies for less cost and lower gamma, or less sensitivity to movement of price. So that's all good. Let's take a look at the market direction, and we can clearly see that we're moving down. So our directional bias is bearish, meaning that if we're looking at out of the money flies, we're looking at put flies out of the money with a high risk to reward, typically 1 to 10. And we can also see here that there was definitely a bearish engulfing candle. I'm not usually looking at candlestick patterns. However, on the Bolkowski pattern site, this is definitely, I think, in the top 10 of candlestick patterns in terms of frequency and strength and efficacy. So top 5 out of 103 candle patterns that he looks at when he's looking at millions of charts. That's pretty compelling data. And it also is showing why we are going down. Now, I don't know how much longer this downtrend will last. You know, that's all up in the air. Who knows what's going to happen today, tomorrow. But we're definitely taking a bearish bias today. And finally, if we were to take a look at our market structure, this red line and this green line are outlining the top and bottom of a major node, respectively. So we're inside of the node currently. We can see there is a structural element at the bottom of the node is at 58.21 on the ES, and the top is at 58.73. We have some strong structural elements right in the middle of the node at 58.50 and 58.62. Now, what this means is that we're going to be looking for a move up into one of these nodes like this. We're expecting it price to find resistance, or even in the top of the node like this. And when that setup occurs, that's when we take an out of the money fly, and then we'll be putting that down below, somewhere down here, right? So that's the whole idea behind this strategy. We're going with the trend. Obviously, the trend's down, so the market never moves in a straight line. It'll move something like this, right? And then we're waiting for that pull up into a structural element, and then we take our trade. All right, so let's get on to volatility. First, let's just bring on the big head here. And I guess the first thing to talk about are the economic reports that are coming out this week, although there aren't any today or on Friday, but Tuesday, Wednesday, and Thursday have a whole string of very highly impactful or potentially impactful economic reports. And the market is particularly sensitive to that right now because last week was sort of an employment extravaganza of economic reports, and the market took them very poorly, even though the reports were decidedly positive. So the market looks at that as something the Fed might delay or cut more or not consider rate cuts for the coming year, and possibly even adding rate hikes. That's the concern of the market, and that's why the market went down on positive economic news. We call that opposite world. But that's what's happening. This week, it's definitely different. This week, we're talking about... Yeah, let me get to this. Okay. These are our economic reports. This is taken from Forex Factory, their economic calendar. You can see that we have core PPI and PPI this morning. Those are extremely high on our, and that's the month over month. And then tomorrow we have core CPI. These are all inflation indicators. And CPI month over month and year over year tomorrow. This is huge in terms of the potential energies coming into the market. And I'm going to show you exactly how I rank that in just a second. And then on, so that's Tuesday and Wednesday. And then Thursday, we have core retail sales month over month, and unemployment claims. All of these are very, very high on that scale. And so let's take a look at that. Right here, is it? Yes, right here. Yeah, I'm not really showing it, so let me show you that. All right. So what you're seeing here is a database that I've created of all or almost all the economic reports that we see, and then I've ranked them by their potential impact on the market when they are introduced. And the more impact, the more volatility they have the potential to inject into the market. And you can see right at the very top is non-farm payrolls, which we saw last week, and unemployment rate, which we're going to see also this week. So I should probably take that and also make it sort of a yellow color. But in any event, we have the CPI, the Consumer Price Index, and the PPI and core retail sales. You can see are all ranked right at the top, 8s and 9s. And of course, the unemployment rate is right up there as well. So all of these are the most highly impactful reports that we can expect today. If you want this particular sheet, you can go down to the description below, and I'll have a link there. It's not there right now, but I'll make sure that it is there after I close out this this show. Also, if you want to learn more about how to analyze economic report data and how it will potentially impact the market and set up your trades appropriately, I would recommend that you go to our school community, which is called the Zero DTE Academy, and also that link is below. Unbelievable resource. There are weekly live sessions. In fact, this morning there's going to be one of those live sessions. It's an options basic course with Q&A. So really, there is no better value that I know of if you want to learn how to trade options and you want to learn how to trade the Zero DTE strategy effectively and how to become consistently profitable, independent, and trade at a pro level. So it goes way beyond anything that I've ever seen on this on the interwebs. Go down below now, join that. It'll guarantee it'll be the best purchase you've ever made in your trading career. All right, look, I I don't make those kind of claims lightly. So the other thing I want to show this morning is because of that heightened volatility, we are setting up for a big-ass fly, and that's an at-the-money butterfly that we take because there's heightened IV this morning. It puts us into a favorable position. Generally, we're looking for the big-ass fly to put on prior to the market opening, before an economic report, looking for that vol crush. But this morning there are no economic reports. So I wouldn't recommend putting it on before the market opens. I'd wait for the market to open and then see if the price is still favorable. What is a favorable price? Well, first of all, it's a 50 wide at the money butterfly. You can do it on the ES or the SPX. You can even do it on the NDX, but then it would have to be about 150 wide because the NDX is approximately 3 times the size of the SPX. You could do it on the NDX or you could do it on the NQ futures, which would be then much smaller in terms of margin requirements. All of those would work. So let's take a look at the big ass fly. I just need to, we don't want to go there. We want to go here. And all right, so the market's already moved, so we really want to bring that over, maybe another strike. I want it to be at the money. All right, so that's just about at the money, close enough, within half a strike. We can see that the cost of that fly right now is $17.35. You know, the lower that debit goes on that at the money fly, the better the risk to reward scenario is, meaning that our profit curve and our gamma is much lower. The debit is less. That means we have more potential profit. That means after the market opens, if we're still in this kind of heightened IV situation, we're going to be able to have a lot of potential for this trade and look for a lot of vol crush probably later in the morning, which typically happens somewhere between 11:30 and 12:30. We'll start seeing volatility move down, and when that happens, the value of this fly will increase rather fast. So while this fly is still appropriately priced in the morning, I would hold on, and then when you feel like you've maybe price has settled out, I would get into that fly and set a $3.50 stop. And if the first opportunity will be that vol crush event right after the morning session is at its culmination, and right after that, if price stays inside the fly, stick with it for as long as you can. Exercise proper profit management, and it should work out well for you. At worst, you're going to lose $3.50. So very good trade. We do this often. Usually we do it before the market opens to try to capture an economic report and the vol crush that happens right after that prior to the market opening. But today we don't have that. But it's still a good opportunity. All right. So that's the whole deal today. I hope you all have a great trading week. It's going to be an exciting one with heightened volatility, and we'll see how it goes. Coach Ernie, out.